There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome to the Trading Justice Podcast. I'm your host, Matt Justice, along with my co-host and trading partner for the better part of the last decade, Tim Justice. Now, before we get into the podcast, just a wonderful shout out to all the Tackle Trading Pro members out there, getting out there, changing their lives one trade at a time. Getting access to Gino Poor's hedge fund scout options report he puts out every Saturday, my forex report, and the Tackle 25, and just the Culture Show and everything else we're doing out there at www.tackletrading.com. Check it out. Go read some of the testimonials that some of our pro members are saying about the site and the things we're doing out there. And ladies and gentlemen, this is going to be the best trading site in the business. Get out there, get in the game, change your lives, and go make some money at the same time. Tim, how are you doing today?
You know, I'm doing great, Matt. Excited to be here. Always excited to get on the podcast and kind of ramble and rant and hopefully educate and inform people out there. A lot of interesting things happening out there in the market this week. And, you know, one of them is the ECB report on Thursday. I've been pumped up. I had it circled on my calendar literally for 6 weeks now. Since the last one in January when we caught that huge pip run to the downside on the euro, I've been waiting for this report. And so I want to talk about that at some point. I want to talk about Gino's picks over in the options report for pro members. A lot to talk about, my friend.
You know,
how about you? What you been up to?
I've been stuck in PowerPoint hell for the better part of the last 2 weeks. You know, it's creating products to help people learn faster, make money faster. It's a time sensitive thing. I mean, now that you're kind of getting into building some PowerPoints as well. And so that's kind of, you know, outside of the trading and whatnot. Had a wonderful last few days just kind of hanging out with the kids. And, you know, I had Kat come on to one of our videos and had her analyze the S&P 500 for this week. Her analysis, Tim, was that for the S&P 500, it is overextended right now in the marketplace, and she called for the market to actually come down underneath 2100 this week. You know, it didn't really do it today. I think the market had a type of, you know, hey, listen, let's get that NASDAQ to 5,000. You know, it's just there's been so many headlines recently. Hey, NASDAQ close to 5,000, close to 5,000, and so whenever you see that, you typically see a little bit of a movement up just because the euphoria of all of it. And so I actually agree with my daughter, though. I think the market's going to, you know, have a little bit of a retracement, nothing drastic, just a short-term retracement, maybe into, you know, the 2080, 2070 range. And that could be a buying opportunity for some stocks that are a little overextended right now. But yeah, it was fun bringing her on to that, to the video and having her analyze. She also called crude to go down as well. And so we'll see if my daughter, who's 5 years old, by the way, we'll see if her analysis on the S&P 500 and crude oil is going to come to light. But I think she's getting to be a pretty little good technician. But speaking of your, you've been really kind of waiting for the ECB on Thursday. And it's going to be an interesting thing. Obviously, the ECB announced their own version of quantitative easing, 60 billion euro going into their markets through printing, obviously. But it's not just that, Tim. I mean, this thing is getting out of control out there. China just reduced rates again. Australia reduced rates again. You know, it literally is. It's like, okay, where are you going to find any interest these days on any major currency, you know? So it's going to be interesting to see what the ECB does. Interesting, though, the ECB, they have not actually done any QE yet. They just made the announcement, you know, 5 weeks ago. And so it's going to, in March is when they're going to start doing all the printing and whatnot. So I'm looking forward to the ECB on Thursday. I think that's going to be an absolute major announcement as well. But also, I mean, you also got the British pound on Thursday doing their official bank rate as well. So it's not just the Europeans. And then on Friday, you got the unemployment report out of the U.S. dollar, and you got on Wednesday, you got the Canadian bank rate statement as well this week. You got in Canada and Australia, you got GDP announcements this week. On Tuesday, you got Chairman Yellen giving a speech. And today, later on today, Tim, you have the Australians announcing the RBA rate statement as well. And, that's it looks like they're going to decrease their interest rate to 2% instead of 2.25. So, we've been in the forex report that I post out there every Monday. I haven't done it yet today. I got to do that before we teach tonight. But this is an absolutely massive week for currencies. I mean, just unmitigated massive week. The currency market's pretty much been going sideways for the better part of the last 3 weeks. On the dollar index and whatnot. And I've been saying for 3-4 weeks in the forex report, hey, listen, guys, I don't think we're going to break out of this until we get another round of the Fed. And that's not just the U.S. central bank. That's this week. That's the Australians. That's the British. That's the Europeans. That's the Canadians. All announcing some degree of interest rate policy, monetary policy this week. So I think it's going to be an absolute massive week in the market this week.
I got a question for you. I got a question for you, and I know the answer to this, but I'm going to ask it anyway. Why is it that when we talk currencies, imagine a new trader out there, and they don't ever hear us drop India, China, Russia? Why are we always talking about Great Britain and the Euro and Australia instead of those other countries?
Well, number one, those are part of the G7, but they're also basically the major currencies out there. You have 7 major currencies. You have the dollar, the euro, the pound, the Swiss franc, the Canadian, the Japanese yen, and the Australian dollar. I certainly think that the Chinese renminbi will be put into that discussion in the near future. But for right now, it's not a major currency. It's a minor currency, despite the fact that the RMB is basically the second most utilized currency in the world and the 5th largest reserve currency in the world. And so when we discuss a lot of these central banks, they're all part of the same central banking system. It's not just the FOMC; it's the Royal National Bank out of Australia. It's the Bank of Japan. It's the European Central Bank. It's the Bank of London. It's these other massive banking conglomerates that are all part of the same central banking system. And so the ones we talk about the most are the ones that move the market the most. That doesn't mean China doesn't that we don't need to discuss China. It's just not a major currency. It's a minor currency right now. So we discuss more in terms of the central banking policies, more about the major currencies.
Well, yeah, and then the other thing is liquidity. I mean, obviously, you're going to talk about and focus on the currencies you trade. The Aussie is liquid. You can trade the heck out of it. The yen is very liquid. The pound is very liquid. Those are the ones that you see traders who jump in and do this stuff. They focus on them quite a bit.
Yeah, with small pip spreads, very liquid. And so that's the ones we primarily trade, and that's the ones that really kind of deal with the interest rates and the central banking policy as well. So it's going to be a really, really big week. We're definitely going to have to do a podcast on Saturday night or Friday night. I'll be in Houston later this week, so we'll do a podcast either Friday or Saturday to recap basically all of the news out there. It's from a GDP to unemployment to Fed decisions. This is probably one of the biggest weeks we've seen in the last 5 to 6 weeks.
I think it's huge. I think it's going to set the tone for a while, and whatever the initial reaction is may not be the reaction you see settle out at the end of the day. There's a lot going on, and there's a lot of key news. And guys, you don't have to be an economist to know it's a big week. You just have to listen to the Trading Justice podcast, and we'll tell you it's a big week.
Yeah, you don't need to be the economic genius. That's not everybody gets into all that stuff. we've been living this for 10 years now, in terms
Yeah.
of the economic reports, Fed policy, monetary policy, trading and whatnot. And, it's just something that we live for. It's something that we're very passionate about, especially the monetary policy, economic theory. So, we understand that not everybody gets into stuff like that. Not everybody gets into, economic theory and system design and, whatnot. And that's why you have people on your team that do. That's why you become a pro member at Tackle Trading, so that you don't have to worry about all of that, because you have a team around you that does a lot of it for you, that prepares you for the market on a weekly basis, that helps you understand the price movement on a weekly basis, that helps you understand when to protect your retirement account, when not to protect your retirement account, everything that we need. And Tim, there's just so much fear out there in the markets right now. I mean, so much fear out there in the markets. And people need help, and from a lot of time, it's very difficult to go spend $20,000, $30,000, $40,000 on to learn how to do this appropriately, because that's honestly, I mean, if you're going to want to create your own trading system and whatnot, that's about what it's going to take. It's going to take years and tens of thousands of dollars to do it. Well, why would people want to recreate the wheel when you got some amazing traders over at Tackle Trading? It's not just the coaches over there.
Yeah.
It's not just Gino and Noah and yourself and me. It's people like Steve Wong and other people over there that have been now trading for 3, 4, 5 years, all kind of growing up and learning the same system. Like Gregory Jones and Steve Wong and Robert Rotolo and all the other, Paul Stewart, and some of the other people that are really helpful over there at Tackle Trading as well. So it's a great community. It's a great website. It's something that we're just starting, and it's going to be the best investing trading website in the history of mankind when it's all said and done.
I'm just looking at the Clubhouse right now, which is where a lot of our traders just kind of post updates and they talk, they communicate back and forth, they ask questions. And the Clubhouse is somewhere I think you guys should check out every day. And I'm looking at all of the conversation back and forth between, traders. And this is actually one of the reasons we built this whole thing out, Matt. And one of the reasons why we're really promoting and we like Tackle Trading so much is our vision. Because as traders, we know there's nothing better than having other traders to give you feedback.
Oh, and absolutely 100%.
I was talking to a group today from all over the world, really, and I was doing a class, and I told them, listen, guys, on my street here in the suburbs in Utah, there's not a single person who trades. Yet I have thousands of people on my power team worldwide. With technology and websites like Tackle Trading, I mean, we can just pull in resources from anywhere. It's unbelievable and it's exciting. I really liked that article that you put up, Day Trading Considerations for New Traders. I saw that today. It's
and
on
I'm
the
going to
blog.
take full credit for writing both of those 2 blog posts that I posted today. Day Trading Consideration for New Traders, as well as futures, using futures as a form of a hedge or speculation. I put a lot of effort into writing those 2 blogs, and
I didn't know you could write so well. I'm reading this. It's very thorough. It's good information.
If you didn't know any better, you would think that I had taken a writing class at some point or another. It's a real, both of those posts are so good. And I strongly encourage everybody, if you're interested in using futures as a hedge or just thinking about getting into day trading a little bit, which we do a lot, to go read those 2 amazing posts that I wrote up there earlier today. And it took me about 10 minutes total to write them both, Tim. It was really good, really good. That's how good.
By the way, I want to give everybody some insight out there. By the time you show up to a class that Matt or I are teaching, it was months and years of experience that got built into every single slide. Matt and I have been developing with Noah and Troy a class right now. And it's a lot of work putting that stuff together. These articles are written articles that, just supplement some of the slides. I'm weird, Matt. The way I do PowerPoints is weird, and it takes a long time.
I'm trying to take credit for the blog post.
I'm waiting for you to just come clean on
It has
this.
my name on it, Matt Justice wrote the new post. That's how it is. It's not my fault. I found the article in the Dropbox.
All right.
I wrote the post. Is what it is. Take credit for it. You put your name next to it next time. No, it's okay. Tim wrote the post.
Maybe we'll do a
Tim wrote
co-author.
both of those posts, obviously, and great post. I just happened to take Tim's very weird creation techniques. It's the weirdest damn thing I've ever seen. See, in creating a PowerPoint, it's really kind of everybody has their different process to it. Me, I typically map out an outline, very detailed outline. Then I create the base PowerPoint based on the outline, just the basically the title slides, right? And then I upload the content over time. You want to write a damn novel before you create one slide. Like literally, I thought, I just found it so funny. We were doing session 3 of Master Trader for Rich Dad, and I'm creating the PowerPoint or some of it, and Tim goes out there and spends an entire day writing this manual for session number 3, and I'm like,
Yeah.
what are you doing? And so I just said, okay, whatever, Tim. So I went out there and created the PowerPoint for session 3 while he was reading, or basically writing this. And it's a really, really good manual that we'll probably post over time. But when you post, you write like 1 to 2 pages on every slide, just kind of get your way your mind works. And it's like, I just don't get it. It is so, that is so much, But you should see us in a brainstorming session between you, Noah, Gino, Troy was in the one on Master Trader and whatnot, and it's literally try to get 4 people in a conversation, all successful,
think differently, who approach life differently, who have different sleep schedules, and then get them in one room to come up with ideas. And we always do come up with great ideas and structure, but get them all to
on the proper technique of how to teach it. We all trade it the exact same way because we're all part of the same system, but we also kind of verbalize it differently and we teach it differently. And so, one of us, might want to say this or that or whatnot. So it's an interesting dynamic to really kind of bring all those traders together. And I remember that when we did it in 2009, 2010, Tim, there was 10 of us at the time doing that, and I was the guy that led the team in creating all of the system for Rich Dad. And basically having myself and those 10 other individuals agree on techniques and strategies and whatnot was so time sensitive. So, because we're all very successful in our own right, but we're also kind of A-type personalities. And so
not me. No way.
We all think we know better than the others. And so we were arguing one time, and you were there, Noah, Jeff, Troy, Micah. There was about 10 of us in that boardroom in Salt Lake City, and we were arguing over the definition of swing trading versus position trading. And I was basically taking on the premise that there isn't a standard time frame on it because every stock's different. And if it's pivot to pivot, one stock might be 3 weeks, the other one might be a week. And Jeff and Noah were just, no, 2 weeks. And we're like, oh, that's, which one's accurate? They're both accurate,
Right.
Because the standard pivot, if you take everything into account, is 7 to 10 days. Is a standard pivot, which is 2 weeks in the market. And so they're right, but I'm also right in the sense that every stock's going to be a little different. And so pivot to pivot has to take into account the individual nature of the stock. And it's something that Noah and Jeff still today think that they were right on. And to me, I'm like, you are right. You're absolutely 100% right. But that doesn't make me wrong.
I remember that argument. Yeah, it was silly, but it's funny. It's interesting to look back and also to just think about the way that we come to a creative place. We all come from a different background, different perspective, like you said, personalities as well. Sometimes hashing out to somebody on the outside, hashing out what a swing trade is probably looks silly. But when you're passionate about a topic, trading, okay, Yeah, and you and me, Matt, we grew up this way. Sometimes you just argue just to come to a conclusion. It's not always a negative. It's like a debate. Yeah.
Sometimes you take the opposite approach just to work out the detail.
I say that all the time. If you can't make the other side of the argument, then you don't know what you're talking about.
You don't know what you're talking about. You don't have enough depth. And so, and that's, I mean, we've seen that many times throughout many other discussions because, just like, for example, Royd. I developed Royd about 3 years ago, but it took me a good year before I approached you fairly quickly with it, but because we're trading partners. But at the same time, it took me a while to approach like Noah and Gino about Royd because I knew what they were going to do. They're going to rip it apart. I mean, that's what they're designed to do. They're going to, break it down, reverse engineer, and, all of that jazz. And so, the same thing when, you brought in a new strategy called the handlebar trade, right? I mean, you want to perfect it before you really kind of teach it to anybody because, what other traders are going to do is just basically say, what are you talking about? And it's not, it doesn't come from a place of, anger or jealousy that you wish you would have done that. It's just that, okay, if I'm going to use this technique or strategy, I want to make sure it works, right? Mm-hmm. And so you're gonna basically take the opposite end and say, well, what about this? What about that? What about this? And just basically, rip it down. But the thing about the handlebar, I mean, it's pretty solid. Royd's pretty solid. It doesn't mean there's not ways we can't make them better. And that's the thing that we try to do every week in our individual coaches sessions. And that's something that a lot of the pro members over there maybe don't know yet, is that each week that me and the coaches, me, you, Gino, and Noah, we get together and we discuss, the markets. We discuss trading. We discuss strategies. We discuss, the things that we're putting out there, the forex report, the options report, the Tackle 25. And sometimes when you put your name to something like the Tackle 25 or the forex report, you have somebody say, well, did you think about this? Did you think about that? Why did you include this? And it's very difficult not to get offended sometimes because you put so much work into it that you're like, well, it wasn't you who spent the last 48 hours designing this or building that. And, but you got to realize that the questions, the analysis, it comes from a good place. It comes from a place where we're simply trying to get better. And so it's a good thing. It's a good thing to question your own belief system. It's a good thing to question your own trading system because as long as it comes from
one of the best things I ever read was a book that in college, I actually picked it up because it was required reading, but to pass the course, I didn't really need it. In college, they make you take this course. They've done this over the last 15, 20 years. They've probably done it forever. Where when you're new, you have to take it's almost like onboarding for college. I don't remember the name of the course, where they teach you what the different departments are and where the library is, and you have to learn Excel and PowerPoint and all this stuff, right? It's a thinking course. It's like these are the skills you need to be a student. And one of the books I had to pick up in there was called The Art of Thinking. Mm-hmm. And when we met in 2009, Matt, I actually went back and I actually read this before because I had to write a book in 2008, a manual for Rich Dad Education, and I was writing. And if anybody's ever out there and you're an author and you've sat down to write, it's a painstaking process, especially if you have inefficient processes. So I thought to myself, trading can be taught. I'm sure writing can be taught as well. And so I went and tried to find resources, and I actually had this old book. And I read it from cover to cover, note-taking, notes. I still keep I actually have a copy of the old notes, and I keep in one of my planners. And the thing I learned from this book is that thinking strategies can be taught, and you can learn them, and you can become more efficient at developing processes. You can take those skills not just through writing and creating PowerPoints, but trading too. Because developing a trading strategy is a skill, okay? Many of our best traders we've ever taught end up developing their own little slant, their own little take. Like you added Royd, which, by the way, guys, if you don't know what Royd is, you should. You need to learn that from one of Matt's classes. Ask Matt about that in the Clubhouse or something. ROID. It's an acronym that describes the return on investment divided by delta. And there's a specific way to do that. But anyway, the way we develop these things, Matt, once you build that skill, then you can go develop new systems, new strategies. You can adapt to the market. So when you're new, it's kind of a process. You first just learn somebody else's system, okay? And then over time, being a part of communities like Tackle Trading, you then can grow as a trader where hopefully one day you can develop your own systems. I think that's got to be the light at the end of the tunnel for everybody.
Eventually, you learn a massive system, but you break it down and you really kind of just create your own little specific trading techniques and systems and whatnot. And we've seen that countless times from traders and people who became successful in this. They really take a system and then tailor it to their own techniques and their own personality and their own schedule as well. So it's a typical type of journey or path I would say traders take.
Mm-hmm. I'm going to give you one of the tips I remember from that book that I think is really maybe explains one of the reasons why I write so much is, and I adopted this and it's been very effective for me over the years. One of the tips the author said was when you sit down to write the complete chapter from start to finish without leaving your computer. Okay. Don't stop. Don't go back and edit for spelling. Don't do anything. Just get the content out of your head into some form. Because if you've ever read anything and it seems disjointed, it probably is. It's probably the author stopped at halfway through their paper, then they came back and they tried to finish it. I had a paper in choking up over here, but I had a paper in college once where I couldn't finish it very well. And the English professor, this before I had taken that class, and he wrote on the end, he says, "Tim, I loved 7 out of the 8 pages. At the 8th page, it looked like you took a dump on the page."
That's probably right. Take a dump on the page.
And I got into the point at the paper where I just didn't know how to finish it, so I just kind of finished it. Just said that we're done. Conclusion. And it's not the right way to create things.
J.J. Abrams
so when
television show, by the way.
maybe that's J.J. Abrams' problem. He doesn't write his episodes out, fully. He doesn't actually have a coherent thought when he's starting a project.
He's a hell of a starter. He just can't finish anything.
Yeah. What are his series he did? Lost, right? And
Lost, which was a top 10 TV show of all time.
He did that Jennifer Garner one too.
Yes, with Jennifer Gardner, and
right.
That started getting into vampires and stuff in season 4. The first 3 seasons, awesome. Same thing with Lost, and then all of a sudden at the end they're like, well, I guess we'll just say they were all dead in the first place. So if you haven't Lost, I just ruined it for you. But still, it's spoiler alert. Yeah, 5 years later. Spoiler alert. Yeah, that's your own fault. You should have watched it earlier. Great show, and he's a genius, and he's revived the Star Trek, franchise. He's putting a new face on Star Wars trilogies as well. So I'm not taking anything away from JJ.
I don't want to ruin anything for anybody out there, but that Star Wars thing, I heard that Vader's Luke's dad.
Are we breaking news?
I did. I heard that.
This podcast right now. Skywalker, Darth Vader's son.
Oh God, But I'll tell you, I really have seen this as well in my own life, in my own trading. As a trader, part of my job, Matt, is to run numbers and do research. And it's a skill set and it's a process. Sometimes I sit down and price 10 credit spreads just because in my brain I'm like, you got to price 10 credit spreads. It's part of my routine. It's part of the way I think. I identify the opportunities in the market. I apply the strategy that's most appropriate, and I run my numbers, and I apply my rules. Now, for a new trader, that might seem like, oh, that's just too much work. Well, okay, that's okay. Then only do 5 or do 3 or whatever, but develop a process you can work with. And rules are important. I mean, it is very important to have structure. If sometimes you go in and do a weekly option, but then sometimes you do a 4-month option and you don't know why your trades are acting differently, well, it's probably because the weekly is more gamma sensitive. If you want to develop consistency in your trading, first start by developing a rule on how you're going to build your strategy. And that's where, like in 2009 and even now, a lot of the systems we build, Matt, they have delta rules and theta rules, and they have rules to them, And the reason we do that is to help traders, really learn how to apply that strategy quick. Because we take our 10,000 hours of experience or whatever it is, way more than that, probably more than that. But oh my God, now I just had a thought I don't want to finish. Like, how many hours have I actually spent trading and teaching and thinking about trading? I mean, 10 years, they say the average work 2,000 hours a year, right?
Done in terms of designing products, back testing, teaching, trading as
30
well.
or 40,000 hours.
You got to think it's wow. I mean, probably 30, 40,000 hours. I would maybe 50, 60,000 if you just want to really kind of do it. But it's a lot, and that's where when you create a PowerPoint, you take in all that experience and you try to make it flow easily from an educational perspective. It's a unique skill set, no doubt about it.
Which is one of the reasons why that Clubhouse and the team and the networking is so important. I get questions all the time, Matt. Am I going to be an expert if I take this one class, this one day? I'm like, no, you're not. You're going to get more knowledge. You're going to be given an opportunity to move forward one more step. But
experts.
I don't think I am yet, and I've been doing this 30,000 hours. And the reason I say that is that
the market always changes. You have to be willing to adapt.
I guess it depends on how you define expert, right? Obviously. I mean, I feel like I have an expert knowledge of it, but I don't like to say it like that because for a couple reasons. Number one, I realize there's so much out there that I haven't tackled yet. I mean, I've never been in the back room of a hedge fund that trades bond portfolios around the world. There are sides of the market I have no access to, right? And I'm okay with that.
You know what?
Yeah.
In terms of knowledge from a trading perspective, we're in the top 1%.
Oh yeah.
There's no doubt about that. So
no, there's no doubt.
From that type of level of understanding, I think you could categorize us as experts. But I also hate saying that. It's like, oh yeah, I've reached the top of my field. The hell I have. I own 5 businesses. I want to own 100.
Well, and
I
take this full circle to not, and this is the thing, is that when you put yourself in a room with 10 traders like the mentors at Rich Dad Education, and you debate what a swing trade is, some people on the outside might think, well, shouldn't it be one answer? And it's not. Okay, I'll give you a different idea here. What is a good credit? That's a question I get all the time. What's a good credit? Well, one mentor might say 10% of the spread. One mentor might say this. One mentor might say that. You developed the best system I've ever seen, which is called ROID, because it standardizes it. It takes the basics of return, risk, and probability, mashes them up, and gives it a standard. But not everybody.
Well, and that's why I created ROID, though, is because there was not one unified standard. We would say things like, oh, if you get 10% of the spread, that's good. And it's like, well, I mean, on basic theory, yeah, that does sound good. You get 10% ROI monthly. Well, my frustration with the way that was taught was because it didn't take into account risk and it didn't take into account probabilities. And so I wanted to take something into account that did take that into account. And that's where ROID came up. Because you can sell a 30 delta and get 10% of the spread, or you can sell a 10 delta and get 10% of the spread. Those aren't the same trades, right? Those aren't even close to the same trades. And so ROID was developed to ensure that you're taking into account the probability assessment on the trade as well, which is your risk. And so it's something that it's something unique to us. And it's something we teach at Tackle Trading. It's part of our system. It's also part of the Rich Dad system as well. So it was a really, really good indicator. But it's even at that though, Tim, ROID has work to do.
Yeah.
Like we still need to ensure that ROID is universal on everything. We still need to discuss whether or not you take into account the true margin or the buying power effect. You need to adapt it to not only credit spreads, Tim, but we now need to start taking into account naked puts as well, and covered calls, and we need to expand Royd's vision from that perspective. Ultimately, we also need to make sure that it's in a spreadsheet where we can plug numbers in, and it's a difficult thing to create. But once you create it, it's just like, okay, now where can we take this from here? So that's one of the things that as a new trader you come into this, you're like, oh my God, this is so overwhelming, and whatnot. But that's why you don't do it by yourself. That's why you do it with the team. That's why you put people on your team that have been there and done that, and had the success, had the failures, and so that you can learn from their experiences as well. One thing you did say, you talked about, and it kind of brought this up, and I wanted to kind of end the podcast on this because I know you had a good interview with Daniel. What was it? Daniel Yin, right?
Yeah, Daniel Yin. I had never met Daniel before, but he was recommended to me as an interview from Steve Wong, and any loyal listener out there knows Steve Wong. Steve Wong, and I don't even know, maybe we'll give him an assistant coaching title. What are we going to call Steve? Is he an assistant coach?
Assistant coach. Oh, I don't know. You got to figure that one out. Anyways, so this guy, you interview him. How'd the interview go?
Well, it was great. I mean, Dan went to school with Steve, and then he also took some Tiger and Rich Dad classes with Steve back in the day. And then he developed a system, and he actually uses and kind of developed off of Steve's theta fade system. And Daniel just is, it's an interesting interview. Everybody's going to get a chance to listen to it. And I'm thinking, Phil, why don't we splice it at the back end of this podcast, so this kind of leads right into it. I did the interview with Dan just before Matt and I started, and it was one-on-one. And Matt, I got to tell you, very soft-spoken, very nice, very polite, and you could just tell he had a lot of confidence. In 2014, he said he made 18.5% trading just a little bit. Not even, he's working full time, and he had a kid just recently. So he's also a little, and this is what I love about things like trading. People can get busy and then they can come back to it. Once you build your trading skill, you have it. Like I could take a month off and go and hike the Appalachian Trail. Okay, I don't know if it takes a month or longer. I've never done the Appalachian Trail. By the way, I hear if you hike the Appalachian Trail, you get to have your own special trail name. I've met enough hippies over the days where they'll tell you their special trail name. Phil probably knows.
Well, I'm sure. I'm sure.
Anyway, so Daniel took a little time off. Now his goal for 2015 is 30%. There's a lot of people, and he sounded very confident talking about it. I could tell this man had a system. It's not 100 strategies, just a couple of different ways to approach it, but that's where you start. I mean, maybe after 10 years, you're sitting there developing 50 strategies, or you're developing new stuff. But when you're new, Daniel's a good example of what a new trader should really try to think about is, how do I build my system? I usually recommend 4 to 6 strategies, but you can start with a single strategy, Matt. I mean, whatever you choose to do, just do it great. Learn everything about it. And the big thing, Matt, and you can talk about this as we lead in, he back tested it. He went back in OnDemand and practiced until he was good at it. I thought that was really cool.
Well, that's somebody who's been trained properly too, though, because most people won't do that. Most people will just they don't have the vision to do that. They want immediate gratification. And so they go out there, they risk their money they work so hard for, and they don't understand trading or their system yet, and they're not patient. And patience is a virtue, and it certainly is a virtue here in trading. So I'll be interested to listen to Daniel's interview and get to know Daniel, because I've never talked to Daniel either. So
yeah.
I do know he mentored with Steve, but Steve just kind of learning the theta fade system, of which we're going to have a new product here at Tackle Trading going out fairly soon. So I'll listen to that later on today, Tim. But I wanted to I got this sent to me today, and I just thought it was so amazingly accurate. Okay. And so I had one of my friends that I know. They sent me this. They said, Matt, I think you'd find this fairly accurate to the economic condition of 2015. And it's a story of this woman, and I don't know if the story is true or not. I doubt it. In fact, it's not true. But I'll bet you there are some truth to it to a certain extent. Do you understand what I mean?
Mm-hmm. Mm-hmm.
So anyways, there's this woman in Dublin. Her name is Mary, and she owns a bar, okay? Now, one day, Mary realizes that all of her patrons at the bar are basically unemployed alcoholics, right? And as such, she can't afford to keep the bar because they're not paying her bills, because they can't afford it. They just come there, they drink a beer, that's basically she's breaking even. She's just not making any money. So what she decides to do, she comes up with this new marketing plan. And she basically says, okay, the marketing plan is this. You can drink now, but you have to pay later. So basically you go into debt to keep drinking, all right? So all the alcoholics start coming over there, and all the drinkers start coming over there, and all the partiers start coming over there, and they all start drinking at this bar. And basically the word of mouth gets around, and all of a sudden it's the most attended bar in the area. Okay, and it's all based on debt structuring, right? You drink now, you have to pay later. Now, in terms of this, it comes to a local bank. The bank starts funding the bonds for the debt purchases at the bar. Okay, so they create these new bonds. The bank creates these new bonds of which they sell to investors, and they're called drink bonds, alcohol bonds, and puke bonds. And they basically label these bonds AAA secured bonds. Okay, they basically just call them a debt, right? And so they start selling these at the institutional level. They start selling them to pension funds, and they start selling these bonds to investors and individuals and and all the bond prices just keep on climbing because it's this amazing new system, and it's just people are buying more bonds and more bonds and more bonds. The value of the bonds are going up, and all of a sudden one day one of the risk managers, probably from Citibank, one of the risk managers from the bank that initially loaned Mary the money and created the bonds, says, okay, it's time for Mary to pay the bonds. Well, what are the bonds based on? They're based on these alcoholics who basically don't have any money to begin with. So the bank goes to Mary and says, Mary, we need you to start paying down your debt. Well, Mary doesn't have any money because she's basically, it's just this built on alcoholics basically drinking for free, and then she gets paid all the bonds from the bank. Well, all of a sudden, she can't pay the bills. Okay, so she goes bankrupt. Now, what happens to the value of all of the bonds that have been sold at the institutional level over the course of the last year, 2-3 years to back this bond scheme? Okay, well, the values plummet, right? Overnight, 90% of the value is gone. Mary's bankrupt, the bar's gone, pension funds that bought the bonds are now 90% in debt. They have to write off the debt. The supplier who was providing the wine and the beer and the alcohol to the bar, they have to go bankrupt because they no longer can compete. So they sell to a competitor. They immediately lay off 150 employees. Mary lays off 10 employees. Businesses are going bankrupt. Now, fortunately for the bank, though, okay, the bank who created this entire system, this debt-driven system that was based on, Mary's marketing campaign of drink now, pay later. The end of it, I love it. It says, the last paragraph on this story says, fortunately, though, the bank, the brokerage houses, and the respective executives are saved and bailed out by the multi-billion euro, no strings attached cash infusion from their cronies in government. The funds required for this bailout are obtained by new taxes levied on employed middle-class non-drinkers who have never been in Mary's bar. And then it says, now do you understand the economics of 2015? And I felt like that story had so much truth to it. I mean, you think about the subprime market, and that's basically what it was: faulty loans that had no value being sold to pensions and institutions and investors at the institutional level, where the banks literally knew they had no value, but they were selling these junk bonds anyways, and this bad debt anyways. And it goes to show you that the people that are always hurt are the people who don't know any better, and that's the middle class, that's the consumers, and they also have to be the ones who foot the bill for all the executives and Wall Street cronies that basically get bailed out every time they over leverage themselves and do something really, really stupid. I'll post it over there at Tackle Trading so people can read it as well. But I thought it was a cute way to basically rip on economics of the last 10 years.
I read that before. So it's one of those that's hit the emails a few times. I actually think I've read that exact story. But it is a good reflection of how central banking has been set up in the last 10 years. You and I rant about it all the time. But it's a cool story. Yeah, post that somewhere so they can read it. I love the Fed movie thing you did. We're going to have to podcast on that soon.
Oh, the Fed movie. Yeah, that came from my dream. I had a dream, and we'll podcast about it as well. But I had this dream that we were making a movie called The Fed. And so I woke up from the dream, and the very next day, so this is last Thursday, I woke up from the dream, and I basically said, okay, I'm gonna cast this movie. And so I did a lot of research, and I basically cast the entire movie of The Fed. I got Ben Bernanke in there, Janet Yellen, Alan Greenspan, Mario Draghi, Shinzo Abe, William Dudley, Caruto from the Bank of Japan, Richard Fisher, James Bullard, Andrew Huszar and whatnot. And I felt that like the cast came out really strong. It's going to be a indie piece, so all of these nice actors are going to have to work for pennies on their respective dollars. But I think it's something that a Hollywood could get behind a little bit. But I thought the cast.
Yeah, we'll have a whole podcast on it. I've got some ideas. I've got some thoughts. I actually wouldn't mind putting together like a little mini video, like an 8-minute, 10-minute video where we actually cast and produce this. I know some improv actors, Matt, here in Salt Lake. We could probably put something together.
Unfortunately, you probably do actually. We got to cast it. We record the video on it. We're going to podcast about it. But we should put together like a 10-minute. Couple scenes here and there from the movie, and then people actually act it out. That would be fun. That would be funny.
Big news, big stuff going on over at Tackle Trading. We've got a coaches show tomorrow on Tuesdays. Every Tuesday, if you're a pro member, we do a live coaches show with the 4 coaches, and that's at 7 East. You'll always get a link in your email if you're a pro member. Forex reports are on Mondays. Newsletter was out from Noah over the weekend. We do that on Sundays. Coach Gino puts out the options report.
Great newsletter by Noah.
Yeah, it's really cool. So great news. Stay up to date with us over there at Tackle Trading. Get on the website. Be part of the team, and we'll see you down the road. Matt, I'm out. Let's talk later, bud. See ya.
All right. Enjoy the interview with Daniel Yin, and we'll see you in the podcast tomorrow.
All right, Phil. I'll see you on the meeting. Welcome out to the Trading Justice Podcast. This is your host, Tim Justice, and I have a guest here today, Daniel Yin. We're here to talk to Daniel about his journey, about his trading, about his system, and the way that he approaches markets. Daniel grew up in San Diego, California. He went to UC San Diego as part of his undergraduate education through that traditional educational system we talk so much about. He's lived in California most of his life. He lives in Los Angeles, California right now, currently, and he is a colleague, a student, actually, of one of our most frequent guests to the podcast, which is Steve Wong. If you haven't had a chance to go back and listen to Steve's, history, his journey, his stories, go find those in some of the Trading Justice archives, and you can get a lot of really, really good information from Steve. Steve was a student of mine and still is, and a colleague and a friend. And Steve actually, he teaches people as well, and he's going to be working as one of the coaches, assistant coaches at Tackle Trading. We're going to be introducing classes we call Theta Fade. And we're going to be looking at doing that early in April. So if you're out there and you're listening and you're excited to learn what Daniel's going to be talking about today, look at Tackle Trading. Go to tackletrading.com and we'll get you some information on when that Theta Fade class will be ready. Daniel, attended a few Tigrant Rich Dad sessions where he used to work on just kind of instincts, some of the things that new traders tend to do, just gut feels. Like he said, not really the smartest decisions that he was making when he started. And then he took a few classes, he got some more information, more training, he connected. One of the advice and tips I'll give everybody out there is that you need to network with traders. If you really want to learn how to trade and you want to build a business, you can't just go off of gut feel. You can't just go off of the tips you read, in the New York Times. What you have to do is you have to network with actual traders that can show you and teach you and help you build out that business. And Daniel did a really smart thing. He sat down with Steve and he learned Theta Fade from Steve. Before sitting with Steve, didn't have a system. Now he has a system. And Daniel, I'm going to bring you in here and we're going to talk. Welcome out to the podcast, first of all, and thank you for spending the time today. Yeah. So a couple of things I want to jump right in here on. Number one, talk to me about your desire to get into trading in the first place. Where did that come from?
Well, after working for so long in the industry, or just working in general, you kind of realize that you're not going to make it anywhere by working for somebody else, and there had to be a different way to get more financially independent. So that drove a lot of it. I knew about stocks, obviously. Everyone knows about stocks, and I know about Silicon Valley, all the .com bubbles and all these millionaires, but I just didn't know what to buy and what to sell and things like that. So I just really wanted to figure out how to get into that. And I thought about real estate myself, but that's something else, and it requires a different sort of mindset. But
sure,
I thought stocks were more my speed.
Well, what's interesting about that is I think we all grow up knowing that these things exist, and even in some of our courses, whether it's high school or college or advanced education, whatever it is, they talk about some of the content, but they don't really teach you how to do it. And I think that's one of the failures of traditional education is they don't really teach people how to deal with their money, how to understand currency, how to understand what's happening from an economic standpoint. I was having a conversation with my wife just the other day, and she had gone back and reviewed a class I'd written, a PowerPoint. And she says, I've been married and known you, Tim, for 12 years. I love you. I have no interest in stocks. I just realized going through and doing all the editing that this stuff, it just bores me to tears. And I said, yeah, that's true. I know you as well, and I know that's true. But I'll give you an example of why we have to know this. When I started, becoming an adult, making money and jobs and careers and businesses and everything, I had no interest in taxes. I could care less. The idea of learning the tax code or the proper way to structure stuff, it was not something I was going to spend time on as a young man. But you realize very soon that you have to understand tax law to get around this world. I feel that same way about finance in general. I don't think it's an optional thing. I don't think we have, we should do this just because it's fun. I think you have to learn how to deal with your money, or else at some point you'll be a victim. So you decided early on you wanted to get involved with trading. What was your first trade? How long ago was it, and how much did you know about markets when you started?
My first trade was, I would say, about 10 years ago, and there was very little I knew about the market. I didn't know how to look at charts and look at patterns or anything like that. So it was wild. And after I took my first Tigrant course in 2008, that's when I learned about options like naked puts and naked calls and such.
Yeah, and there's a light bulb moment that happens in anybody's education when they first are introduced to options. And if you're out there and you're listening and you've never traded an option before, all it is a contract. You have access to it. Well, I should say you probably have access to it. If you don't, you may need to get a new account or get an account set up. Some IRAs and some traditional accounts may just be cash, and they might just be stocks. Sometimes you may have to go for a different level of trading authority to trade certain strategies. But the naked put, I'm glad you mentioned that one. Selling options, theta, time decay, cash flow, those are the terms we think of when we think of naked puts. Did you do well with that? Did you have some ups and downs? Did you learn how to trade naked puts? How did that go?
It went pretty well. It was very conservative. I was far out of the money, and maybe a month, at least a month out, maybe 2 months out, and I just made $50 here per month or $100 there. It's nothing to write home about.
Yeah, I mean, I'll tell you, the thing about that though is I remember talking to Gino, who's a coach at Tackle Trading and a colleague of mine, and he was talking about one of his first trades, and he sold a naked put. And one of his first goals, Daniel, was one of the simplest but I think coolest goal. He said, I just want to pay a bill. One of my monthly bills, I want to make enough money from a trade to pay off a bill, and it made it tangible to him. It's okay to be conservative. I think one of the things that we need to do is we need to build on small victories in life and, grow our confidence and move forward with our training and learn, because you can always get more aggressive later. People come in to trading and they start swinging for the fences sometimes, and I understand why. They want to have that income right away. But you should always build out your process and your practice, first. Now, talk to me a little bit about after that, 2008. When did you meet Steve?
Well, we actually went to USC together in 2002 to 2004 for business school. And we were in the same class. We were actually in the same group for half a year. And we just kept in touch after graduation. And then in 2008, he mentioned to me that he started trading. And he's kind of vaguely hinting at the way it works, the way options work. But he didn't really want to take responsibility right then and there. He said that I should get some education, and he suggested going to the Rich Dad Poor Dad classes to get that foundation.
Yeah, I've tried to pull in a couple of my old college buddies into the market. Some of them it's worked for, others they didn't really take to it. The one thing I know from being a teacher and an educator and a mentor is you can get anybody excited about trying something, starting it out, especially when there's money involved. But really, to build the business out, you have to have discipline, and you have to show up even when you don't necessarily have all the knowledge yet. And you have to practice, and you have to study, and you have to network. So it does take some effort. There's no doubt about it. So Steve, you've known Steve since school, huh? USC, the Trojans. Yeah, he's probably a lot different now than he was then.
Well, he's a lot more confident as far as the money is concerned.
Yeah. Well, I'll tell you, that's a mindset change, Daniel. One interesting thing I've found in life is that mindset really does drive so much of our decision making and our success. And what we want to do in life is try to continually improve and surround ourselves with people that can help us see things in a better, more productive, more financially lucrative way. One thing I love about the way Steve approaches markets is that he's taken all of the training and the knowledge that he has, and he's developed his own system. And I find that to be fascinating. I think it's great, actually. And you had a chance to sit down and you learned for 3 days. Much of what I do in training, actually, is I do mentoring as well. And I'll bring people into my office for 3 days. So I understand that process. Tell me about those 3 days. What did you learn during Steve's mentorship?
Well, the first 3 days, actually, the first day we just went through patterns, and he just went through almost like a crash course on options again, as well as bear calls and bull puts. So you just want to make sure that I understood what those were, and then we started looking at patterns and charts, and we just looked at all those the first day. And then the second day and the third day, a lot of it was, I don't remember all of it now, but I think a lot of it was going through the OnDemand within the Thinkorswim platform, just go through past days and just practicing. That helped a lot.
Yeah, I'll tell you, I think that's really, really valuable right there, and it's a really good tip for everybody out there. You're never going to sit down and remember everything you were trained on. I think that's some of people's trepidation too, is that, I'm going to go to this mentorship, Tim. It costs me a lot of money to pay you to train me, and then I'm going to forget stuff. Well, one of the skills that a good mentor has is the ability to teach somebody so that they can go home and grow and learn from there. Sitting down and learning how to back test was probably the most valuable thing Steve did for you. Because then when you got home, I'm sure you used that on-demand tool and those practice tools to be able to grow your skills, right?
Oh, most definitely. And it helped a lot being able to reach out to him when I had questions about mistakes. And one of the things that he did teach in those 3 days is defensive strategies. something that everyone should know when you should get out, what you should do when things are not going your way.
Yeah. Yeah, I like it, and I'll tell you, there's several things to consider about on-demand and back testing. It's not perfect, but it's not supposed to be. And there are some technical limitations to that specific system. But even if you're out there and you're not a thinkorswim user, you can backtest by just writing things down on a piece of paper. You want to learn how to structure some kind of simulation, some kind of backtest, whether it's just, building an Excel sheet and logging in when you'll trade. I'll tell you one thing I did years ago, Daniel. I had a student in one of my classes, and this student was convinced, just absolutely convinced, that when the stochastic was over 80, that a stock would go down. And that's not true. And what we had to do is I had to go back to him. And the only way I could get this student to wrap their head around this, because they had a belief about something in their trading that wasn't accurate. So what I did is I structured a back test. I said, we're going to take the 5 biggest stocks in a market. I think at the time it was like Apple and Google, some of the same names right now, ExxonMobil, Microsoft, whatever they were. And you're going to go back over the last 5 years, and you're going to mark down the day when it crossed above 80. You're going to write down the price of what it was the day it crossed, the day after, 5 days after, 10 days after, and I think it was 30 days after. And there's something I've learned I learned this actually back in college. We were talking about college earlier. I had a job in college working as an assistant to one of my professors, and he was a political scientist. And so he did a lot of studies, and I had to code data. And so I learned from that you don't ever draw a conclusion until you have the data. And so I said, don't think about what you believe will happen, just let it come. And after trade after trade after trade, this student started logging the data. And you could see the light bulb go on. I mean, it's just illuminating over time, realizing, whoa, something I thought was accurate is not necessarily accurate. And this is what happens with testing, and this is something I would recommend for everybody out there. If you want to build your skills up quickly, take what Daniel did here, or take the example I'm using about my student, and build out some kind of simulation. It doesn't have to be in one specific program. It doesn't have to be one specific way, but it has to make sense to you. Now, one of the best things you can do, though, Dan, I want to ask you about this as well, is not overcomplicate it. Because if we added like 20 variables to that one system or that testing, we might not draw the right conclusion. What did you specifically go back and do your on-demand back testing on?
Just looking at the patterns in the chart, with theta fade, there was some indicator that Steve provided. A lot of different indicators, obviously, but a couple key ones that I should look for, and that's what I was looking for. And during the time when I should do it, things of that nature is more or less how I would trade for that day. And I traded on those days, and he would just critique what I should have done and when I should have done it.
I like it. I like it a lot. Because what you did is you said, I'm going to test one strategy. And usually this is what I recommend to traders out there, is you shouldn't test more than 1 or 2 strategies at a time. Sometimes we'll go back and back test the difference between a call and a bull call so that we can compare the strategies. Other times we'll go back and back test just naked puts, And if you're going to back test, you really want to design rules for what you're going to do. So, for example, maybe you always do a 5 delta or a 10 delta or a 20 delta or whatever the number is, whatever the design is. But that way you can generate some kind of baseline consistency. So as you produce results and as you get numbers and you log the data, you can then draw appropriate and accurate conclusions from that data. Backtesting, oh my word, is so much fun. So now fast forward, you tested the system, you learned the system, you're networking with somebody who uses it. Now you're networking with other traders and you're here trading today. Where are you at with your trading right now?
For the month, or for the year of 2014, I got 18.5%. And that's with infrequent trading. I wasn't trading all the time because I actually have a 9-to-5 job, and sometimes I couldn't trade on those days. But on the days that I did pretty well. I think the biggest loss I had per day was like $100, which isn't too much. So I made more than made up for it.
Wow.
For 2015, it's been a little bit tough since I just have a newborn. So I haven't been able to trade because I haven't been able to sleep. But,
Well, well, you may want to learn to do is trade forex then, because then you're going to be up in the middle of the night anyway.
yeah, that's probably something else I have to talk to Steve about.
Yeah.
Yeah, so it's 2015 has been a little tough, but it's still early, and once I get into the groove of things with a new kid, I'm sure I will get back to trading. And my goal is to hit 30 or 40% this year.
That's awesome. You know, several things here that I think everybody needs to grab onto. Number one, 18.5%. Daniel, don't ever apologize for that. That's pretty awesome. Good work on that, my friend. I love it. Number two is that one of the things about building these skill sets out is that you can have things happen in life. You get a newborn, you're busy, got a new project at work, or you want to build a different business out and it takes your time for a month. You can come back the next month and use the same techniques. This is a skill that doesn't go away. And I tell people all the time, build a skill that's going to work for the next 10,000 trading days, not just, right? You know, learn to adapt, learn to evolve in different market conditions. And I love the goal setting as well. I'm a big goal setter myself. I believe in writing things down. I believe in like direction and structure, especially in business. And trading needs to be treated as a business. So that's great. I love it. I love it. And, you know, you're focused on theta fade right now. You know, maybe over time you can build in some new strategies. I usually tell people start with just a few things that you can learn to do well. But then at some point, you're going to have the time to add something new.
It's just a matter of time adding something in, like you said.
Yeah. Well, you know, Dan, what advice would you give anybody out there? You know, we're talking to an audience out there of beginning, intermediate, and advanced traders, people with all kinds of different backgrounds, different skill sets, different viewpoints from around the world. You know, as an entrepreneur, as a man, as somebody who's also building trading out, what advice would you give them in terms of getting things up to speed?
Definitely take some classes and understand what you're doing in different trading strategies. But then you should definitely find a mentor, because a mentor is invaluable to provide you some guidance on good strategies, because you might get the ideas, the basics of how to trade and what the different trading strategies are, but you don't know. You have to have some sort of system. A system is so helpful. And then providing rules for yourself. You just have to be very, very consistent with those rules. If you're going to do X, Y, and Z, then you should stick to X, Y, and Z. And once you start breaking away from those rules is when things start to break down for you. So just be consistent.
You know, I love it, Dan, and I think that's really, really good advice. Develop a system, develop consistency, and continue to grow as well. You know, the thing that you're doing that I personally also believe in is your networking. I mean, you and I, this is the first time I believe. Have I ever had you in class before?
I don't think so.
I don't think so. I think it's the first time we've ever met. Now, there's another trader I get to know, and you get to know as well. And I'd recommend that you get over there and tackle trading and be a part of that community as well. Those are good people, and they're there to help each other. You know, we have a lot of experienced traders, but we got a lot of new traders as well. And I think that the whole idea of team is to give an environment, put everybody in an environment with the right tools and the right training so that they can grow together. Steve Wong is he's a great guy, and I'm excited to see what he can do with that theta fade, information that he's going to be providing out there that we're going to be hosting over at Tackle Trading. I know Steve has made a lot of changes in his life as well. He's got a young one, so maybe those they'll be buddies. Your little one and his little one.
Oh, definitely. Trading buddies.
Trading buddies, yeah. Teach him young, teach him early, teach him often. Well, Daniel, appreciate your time here today. You know, this has been Tim and Daniel Yin from the Trading Justice podcast. You can listen to our podcast on iTunes, and if you like what we do, it helps us in the ratings to bump us up and rate us as a 5. Give it a review. Let other people hear what we're doing over here at the Trading Justice podcast. You can locate us on tradingjustice.com or from our sponsor, tackletrading.com. where Tackle Trading is a trading community that provides education, information, an environment for you to grow and learn in, and also a lot of help. Dan, say bye to everybody. Any last words?
Nope, just keep consistent.
All right, get in the game, guys. Thanks.
You've been listening to the Trading Justice Podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice Podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.